What is up, guys, and welcome back to another video. Recently, the US stock market has been in a bit of a slippery spot, so I do want to make a video just looking at where we could be headed to the downside, where we could be looking for a bounce, and then also some catalysts that could either, shoot us right back up or push us right back down. So there is a lot to go over in this video, so before I do get into it, make sure you guys do like and subscribe as always. And if you guys are new, make sure you guys go down in the description down below, join up on our free Discord. We have over 500 plus profitable members over there. Now, let's go ahead and jump right into it. I'm going to skip the chart for now, and we're going to look at some catalysts for why I think a correction could be coming. These are very, very vague catalysts, but just simple high valuations. We know stocks, a lot of these stocks are up towards all-time highs. I know a lot of them aren't, but a lot of these stocks are pushing over their valuation. A lot of them are overvalued on where they are today. And that is a sign that, the market has pushed a little bit too far. So that is one thing to keep in mind. Other things like rapid increases in stocks, you've seen Palantir, HIMS, stuff like that. A lot of these stocks have gone, 2, 3, 500% in the last year. And normally that is kind of the sign when you start seeing a lot of stocks like that do that. That is a sign that you're pushing towards the end. That's kind of the euphoria of the market. And then another thing, rising interest rates. They still haven't talked about cutting interest rates. I know there's kind of a two-sided story to that. Trump wants them cut, Powell doesn't. So we'll kind of see how that actually impacts the market. But for now, it definitely is a bearish thing that we haven't continued to cut rates. I do think that at least one is probably needed sometime soon. And I think if we continue to dip, that will come very quickly. Next, we have economic data disappointments. All of that CPI, news, jobs, all of that has been on the weaker side as of late. So there is a few things to think about there, but really that data that keeps coming out with CPI and stuff like that really hasn't been great. And the market has still been moving up. So the market is strong, but eventually that is going to crack. You can't really just keep moving up off of, negative to break even news. You do need good news to push you up at the end of the day. Market concentration, we have a significant portion of the market's gains being driven by one large tech stock or a few large tech stocks. Guys, last year the S&P did around 26%, I believe, and I believe 22% of that 26% gain was all off the back of Nvidia. Nvidia did around 140% last year. So that drove the stock market up 22% in total, and then the rest of that other 4% was from the rest of the other 499 stocks in the S&P 500. That is just a crazy thought. I didn't know that until a few days ago, but when you're putting in that kind of size just from one stock, you're bound to have a pullback if A, that stock doesn't do well, or if B, the other stocks aren't catching up to it, which obviously hasn't happened. We really haven't seen another Mag 7 stock like that do 180% in a year as of recent. Another thing, global shocks, unforeseen events. That's just um, all this crap that's been going on with the planes, with the China tariffs, all of that. That's really just going to be my news section. All of that tariffs, those job claims, the cutting jobs, the uh, airplane crashes, all of that is going to fit into this category, which is really just news and bad stuff happening around the world. And then worsening employment or unemployment. Uh, I know that the political party has looked to cut a lot of jobs. That could be impacting the markets heavily, and I honestly think it will. They have been cutting a good bit of jobs, which I think will benefit long term, but short term it will most likely negative impact the market. So that is definitely something to think about. But those are going to be my reasons for why I think the stock market could be correcting. Um, and then I do have one more thing, but I wanted to pull over to the chart. So I'll get into that last catalyst in a second. But you can see right now we're currently sitting at 596.47. We have this golden zone down here that we are looking to drop down into. I think we end up getting down there today and tomorrow. And then NVIDIA's earnings will either take us back up or put us down. And I think NVIDIA's earnings are going to be the catalyst that really are riding on a market correction or not. If we do beat on earnings and the stock goes up, I think we could return to all-time highs within about a week, maybe 2 weeks. And if Nvidia is to miss on earnings, I think we could see that correction begin to happen. We're gonna go ahead and look at some price targets, but let's start with a bounce. If we are to get a bounce off this golden zone, you can see that we'll come down here to around 590.42 at the lowest, and then bounce out of there hopefully with earnings. And then from there, it really is just all-time highs. I mean, you have a few small points of resistance, but there is a lot of gaps left up. So really, I'm not going to take those resistance points too serious. I don't think it's going to be straight back up to all-time highs, but I do think we will inevitably regain all-time highs. We have a little fair value gap here. Fair. Oh, my keyboard isn't connected. But as you can see, we have a fair value gap right there. We have the golden zone right here. So I think if we bounce out of that, we can see that fair value gap fill come very soon, probably by maybe Monday, Tuesday, Wednesday of next week. Um, but that is only if we can get that NVIDIA bounce. Now let's go ahead and look at some fair value gaps to the downside. If we do break through that golden zone, say NVIDIA's earnings do miss, or say we just continue to slip, we can definitely fill this fair value gap very quickly and then honestly make our way down to 575 very, very fast. I think if we miss on earnings with NVIDIA, we will fill that gap the next day. So if we are down into this golden zone and NVIDIA beats, look to play the bounce. And if they miss, look to absolutely crater the market on puts. That is going to be a strong, strong play. I might even hedge some of my portfolio into puts before earnings just to play it safe. But you can see we do have this downside target of 575. And then if we are to break that, that is going to be my sign of a market correction ensuing. That is when I will probably begin to offload and take some more of my profits before it really does get nasty. So let's go ahead and look at a few more price targets and then inevitably where I think we'll bounce if there is a major correction. So you can see we have 575, 570, and 564.86. Those are going to be your main resistant points after 586 or 564 is going to be a big spot here. As you can see, we have some good support and resistance over here on the left. And then moving down here, you can see our next point is going to be 539, 510, and 493. I know these are very vague, but you don't know what the market is going to do. You don't know what a correction is going to look like exactly until it happens. So these are just my vague price targets. I do believe if we do get a major correction, that 493 would be around the low of a whole entire market correction. And we can see from prices today, that would be about a 17% drop. Honestly, we could probably end up going lower. Wait, what is that from all-time highs actually? Okay, never mind. From all-time highs, it's around 20%. I think that is about right. We might end up going a little bit lower. I don't really see us going past this 480 mark, but it's very possible. That might be more of an area to bounce, but nonetheless, I do think that there is a market correction on the horizon. Is it coming right now? Is it coming in a while? That is to be, seen, especially after earnings. But I would kind of bet on there being a larger correction, maybe not a crash, but a larger correction coming. Um, if Nvidia is to miss, I think Nvidia is really going to be the market maker this week. So I do expect Nvidia to beat as always, and I do expect the market to move up as always. But we always have to be cautious of the downside and always understand what could possibly happen on the other side of whatever play you're playing. So looking at that, we can go ahead and target down around a 22% move to lows at around 476. I think that could be the bottom. I do want to see that number get over 20% for it to be an actual, crash. But that is what I would be hoping for. I know that that's not, really what you want to see, but I would love to get some discounted stocks there. I would love to build up some cash and get ready for that. I know it would suck. It wouldn't be fun. But in the long term, it would probably benefit, especially us younger traders, much more. So I also do want to talk about something. The last three bull runs have all been the exact same size so far. So that means the 2020 from 2020 to 2022, this bull run is the exact same size as this bull run, and then I believe the bull run prior to that is about the same size as well. I don't know. I believe this is the same percentage rise, and then we just spike here. But nonetheless, we are looking very similar in the last three bull runs and last three setups for a possible major pullback. So that is what I'm expecting. I am expecting a good pullback, especially if Nvidia is to miss. And if Nvidia is to beat, we could definitely continue higher. My top for this whole entire cycle is going to be at 600. Whoa, sorry, $632. That is where my 618 extension is targeting. So I do think we could possibly see more upside to that 618, and then from there, maybe crater down. Which once we get there, obviously I would make another video like this. But for now, I do think that tariffs are negatively impacting the market. I do think that there is some other news surrounding the markets that are negatively impacting the market. I think stocks are highly overvalued right now. I also think that there is a lot of market concentration. A lot of these stocks, 1 to 10 stocks, those Mag 7 stocks are really impacting the market. We haven't seen small cap stocks move in quite some time. IWM really has not had a good year in a good bit. And then other stuff like rising interest rates, economic data, disappointments. So those are just some things to keep in mind while you guys are continuing to trade and thinking about jumping into the market. I would still recommend it. I think buying the dip is always a good option, but I also would be very, very, very careful about how you guys go about it. So that is really going to be it for me, guys. I just wanted to make a video letting y'all know where I stand on the market and where you guys should be looking. So let me know down in the comments down below if you guys do think a correction is on the horizon. Do you guys think Nvidia will beat or miss on earnings, and what do you think the market will do with those earnings? And then that is going to be it for me. Make sure you guys do like and subscribe as always. Go ahead and join up on that Discord. Link for that is going to be in the description down below, and I'll see you guys in the next video.